Hi all, it's 28 September 2021 today. I'm going to touch on Robinhood. Is the era for millennials to invest and trade here to stay? Well, before I proceed, appreciate a like if you like this video and do subscribe to the channel in order to be kept updated on the release of important videos on various companies as well as broad market review done by Hopehope. Just a quick run through of Robinhood. Well, founded in 2013, their aim is to democratize finance investment and to allow everyone to have access to a financial system regardless of their background or the size of the bank account. One particular point to note is that majority of Robinhood customers are below the age of 35. Typical of the platform is that they have range of products covering from stocks and funds, options, gold, cash management, and cryptocurrencies. Jumping straight into the key data, you'll see that one key part of the revenue model depends on payment for order flows. And Robinhood is positioning itself as the fintech, which means that looking at the money active users are very key to assessing the business potential. So since Q2 2020, from 10.2 million monthly active users to Q2 2021, it has doubled and become 21.3 million monthly active users. This is an indication that more people are more interested into investing and trading via the Robinhood platform. So you see the GameStop saga in Q1, the 17.7 million, and Q2, 21.3 million is also in connection with the saga and the attention brought by the AMC surge in the price. What is noteworthy is that in February, March, when there's the Bill Hwan event that led to markets to correct like 10% or more for the Nasdaq 100, well, the active volume or the monthly active users number did not come down. In fact, it went out. Even the sell in May narrative did not impact on this monthly active users number in Q2. They have been growing their funded accounts, which is the number of accounts that are funded that can be doing investing and trading. So for 9.8 million in Q2 2020, it went all the way out to 22.5 million. Of course, you look at the customers asset later, you will roughly know how much per funded account have in terms of their account. So you will see that the higher money active users coincided with higher funded account. And going for this year onwards for the rest of the quarters, Q3 and Q4, I do not think there's a reduction in terms of the money active users as well as the abatement of the excitement over investing and trading, because people are getting more and more educated, knowledgeable, and with the publicity given to Robinhood, Tiger Brokers, Futu, Weeboos, etc., more and more people will fund their account and start opening account. Like what I mentioned earlier, assets under custody is an important metric. So from Q2 2020, it tripled from 33 billion to 102 billion. And taking account earlier the 22.5 million funded account, each account has around 4 to 5k of USD. And you see in terms of further breakdown, when you have breakdown in terms of assets, be it equities, options, cryptocurrencies, and net cash held by users, the majority, in fact, they didn't provide the specific number, is 60-70%, I think, being the equities, and the other significant portion pertains to cryptocurrencies, which should be around 20%. But will market conditions affect the AUC? Apparently it didn't, when the Wuhan incident did not cause any panic to cut down drastically in terms of asset value. And even the sell in May narrative did not hit the Q2 2021 asset number. One thing is there's a growing in terms of funded accounts. The other thing is as people earn more, don't forget the group of users for for Robinhood is actually young investors and traders. So when they earn income, they will continue to pump the funded accounts. There's this possibility. The question is, will retail investors or traders know how to hedge their bets to do risk management? So you see, 1Q2021 is a very special period when average revenue per user is $137 and Q2 is $112, which is roughly the same compared to Q2 2020, Q3 and Q4 of 2020. So I would expect going forward, this is a stable number, should be around 110. Unless there's major excitement in the market again, then potentially we'll see another heightened volume being churned out to create a higher average revenue number per user. I'm generally very optimistic about such platform because being a youngster before, I mean, the thirst to learn is always there, and the thirst to create wealth is also there. And this is just the beginning. When you see the total net revenue number, for Q1 is 420 million USD and Q2 is 451 million USD. Despite the drop in average revenue per user and lower trading volume, I mean, you see Robinhood has been doing very well and growing around 7 to 8% in terms of net revenue increase quarter on quarter basis. If you look into the detail further, you will see that when the equities volume fall, the crypto volume actually went up. So the dual product or dual multi asset that they are introducing on this platform help them to safeguard their revenue number. And it's interesting to see that a lot of people of Robinhood is also trading cryptocurrencies. So it's a risk-taking mentality there. So this is the net interest revenue, and that's breakdown in terms of securities lending, other interest revenue, margin interest, and interest on segregated cash and securities. As the customers' asset grow bigger and bigger, there will likely to be more trading and investing. And when people invest or trade and they took on margin, leverage out a bit, that's where you see the margin income is growing, and hence create a buffer of revenue source to the revenue of the group, as well as higher customers assets. They also allow Robinhood to earn the interest. Of course, we know that the GameStop saga in Q1 led to an unprecedented situation where Robinhood halted certain trading. So what happens? And they during that period took on an emergency loan, convertible note being issued, and because of the fair value changes itself, Robinhood incurred a loss of 1.4 billion in Q1 and 0.5 billion in Q2. But if we actually adjust out this kind of fair value losses, in fact, Robinhood is churning around 20 to 50 million USD per quarter, which is very close to what they are doing for Q4. And because of the higher average revenue per user in Q1, Q2, as well as higher customers asset base, the revenue number, the net income number naturally increase. Now we go on to look at different platforms. So we see I've been introducing Tiger Brokers and Futu, which is an Asian-based fintech, has similar business model, except that their key revenue is not through payment for order flows, because Tiger Brokers and Futu are charging low commissions like 1 or 2 USD per trade, and they aim to optimize the matching of buy and sell orders so that customers can enjoy the best price. So you look at what I've shown here. Robinhood naturally have the highest number of funded accounts, 22.5 million. Tiger Broker is 529,000, and Futu is around 1 million. But of course, we know that Tiger Brokers and Futu have higher deposited amount compared to Robinhood in terms of per account. Robinhood is only $4,500, $5,000 per account, and Tiger Brokers is around 50,000 USD, and Futu is also around $50,000 per funded account. And you look at their revenue, naturally, Robinhood revenue is the highest, followed by Futu, and last by Tiger Brokers. But Tiger Brokers is demonstrating a very strong growth in Singapore and have at least 200,000 paying customers from Singapore. But you look at the gap in terms of the market cap, 38.3 billion for Robinhood, 1.74 billion for Tiger Brokers, and 13.7 billion market cap for Futu. There's also a recent news article on Trade Republic in similar business compared to Robinhood, Tiger, and Futu. These top VCs actually overpaid, like Sequoia, TCV, Thrive Capital, Peter Thiel's Founders Fund. They pay like 72 cent USD for each dollar of customer asset. That's very high, isn't it? And they have over 1 million customers, similar to Futu, and just slightly higher number compared to Tiger Brokers, assuming they are comparing to the funded accounts. But Tiger Brokers, they themselves have 1.4, 1.5 million accounts being opened. But of course, funded accounts is 529,000. So all in all, if you actually look at what Robinhood valuation is implying 37 US cents per dollar of customer asset. I made an implicit assumption that Tiger Brokers customers are taking in 20% leverage. So with that, Tiger Brokers is actually being valued at 0.06 USD per customer deposited dollar. So Futu is only 21 US cents. So based on this metric, as compared to Robinhood and compared to Trade Republic, Tiger Brokers and Futu are very underpriced by the market. Are the Chinese regulation concerns creating such a big price disparity? Possible, and the unease created concerning ADRs is what people are worried about. But of course, Tiger Brokers and Futu can do in future is to actually have a separate listing in Hong Kong as well. This to provide the safeguard to the investors. But then again, whether is it cheap or expensive, this is just one of the metric, and one has to make a call based on his or her risk appetite. If you actually look at the relative share pricing among Robinhood, Tiger, and Futu, right now, beside the initial days when Tiger Brokers and Futu had generated a lot of excitement in March when Tiger went out to as high as 38 USD, Futu to close to 200 USD. They have since come down to so much lower. Tiger right now is around 11.5 USD and Futu is around 90 USD. Whereas Robinhood, beside the initial days when it goes up from 38 USD to 70 plus USD, it has so far resided down to around 44 USD, and its IPO price is only 38 USD. Market concern right now is, will SEC regulations come to implement very strict rules or in fact ban payment for order flow? So this may hit Robinhood business model hardly, even harder compared to Tiger Brokers and Futu, because they themselves don't charge customers based on this kind of model. They actually charge $1 or $2 for the trading commission. Of course, we know that Cathy Hood also invested in Robinhood. Will we want to tell her to actually follow her back? I wouldn't, because to me, I have enough confidence in Tiger. As always, this should not be construed as any investment or trading advice. Thank you.